Hello everybody and welcome to this November 8th Economic Impact short video on the state of the economy. There's a lot going on these days, and as usual, I'm joined by our eminent chief economist, Stéphane Marion. Hello, Stéphane.
Good morning, Martin.
So let's start again with COVID. Things are going better except for some regions in Europe and China, a little bit to worry about.
Yeah, it's back and forth, Martin, on the pandemic. We've had some interesting relief out of the US, also Israel, but in recent days we're seeing an upsurge in cases, new cases in the Eurozone, which might undermine the economy, economic activity in that part of the world. And China also, Martin, in recent days has warned that the next few months could be difficult for the Chinese population due to new cases that are being recorded.
And the Olympics are going to be there next summer, so they want to be careful, right?
Yeah, and it's an important point, Martin, that you're raising. It's not so much that I'm overly concerned about, a massive death toll for China, but it's just that they have this zero tolerance policy with regards to COVID, because they want to get prepared for the Olympics, and they don't want to face the same scenario that Japan was forced to delay the Olympics. So because of this, if it's zero tolerance, then there's going to be an impact on the global supply chain in the coming weeks. So we have to be wary of that development in the Middle Kingdom.
And despite all of this, the stock market worldwide are reaching new heights.
Yeah, record high for global equities, Martin, and it's relatively widespread outside emerging markets in particular, but Canada, US, new records as of November 5th, and so far so good. The equity markets are still driving on the earnings that have been relatively robust.
Well, that's what's striking about this chart, Stéphane. It's the discrepancy between the multiples and the market. So something's going well.
Well, yeah, I mean, the contraction in P's is lesser bad in that chart, Martin, considering that it's really because profits are being revised up for the coming year at a blistering pace. That explains the compression in P. So the stock market doesn't look overly expensive at this point in time. Having said this, Martin, again, we need to control for the fact that the global supply chain will be impacted by the Chinese policies related to COVID for the coming quarters.
And question for the quiz: where should we be in 2021?
Where you should have been.
Should have been.
Canada, but so far in Q4, Martin, it's 7% growth. I mean, you normally get that in the full year, so 7% so far in Q4 is a great performance, but 26% almost year to date. Canada was really the place to be in a context where it's a global economic recovery with strong commodity prices. So very, very great performance for the S&P TSX.
And it is based on an outlook for growth, which is quite exceptional.
Yeah, what's fascinating on this slide, Martin, is that it's still a bullish outlook for Canadian equities. Given what's happening to high demand for commodities, they should remain elevated. And note on this chart that we have actually surpassed the previous peak on profit expectation that was established over a decade ago when oil was at $120. So clearly people are more optimistic on the S&P TSX. That's why I still think that on a relative basis, the S&P TSX could actually do well in the coming months.
You just mentioned oil, a word on energy, Stéphane?
Yeah, so if you want to explain the profit revision, clearly, Martin, what's happening on energy is quite interesting. A $10 billion surplus for Canadian trade on energy products. It's a record high. The previous high was $8 billion. So it's clearly the energy sector is helping drive profits higher in Canada.
And in the category of new record, let's talk about employment.
Yeah, and it's important to mention this, Martin, because we're not purely driven by energy alone on the S&P TSX. There's also the performance of the domestic economy. If you create jobs, it's good for financials, it's good for retailers. And what we saw with the jobs report that came out on November 5th, record employment for the month of October. So we are actually surpassing the pre-COVID level. And we're well ahead of the US, which despite a good employment report, is still 3% from its pre-COVID level. Martin, that's 4 million jobs. So clearly the Canadian market, domestic economy is doing well well supported by employment creation.
And despite this, there's a growing gap between the valuation of the two stock indices.
Actually, it's unusual because you mentioned before that P/E ratios were still coming down, but remain above the historical average. Not the case in Canada. I think that there's something undermining the P/E ratios in Canada. Maybe, and it's unusual to have this divergence there at this point in the cycle. So. Maybe there's uncertainty related to COP26 as to what the federal government will announce on the decarbonization front in the coming weeks. We know we have a new environment minister, so it will be important for the authorities to tread carefully on that one. So clearly there's that, but there's also the fact that, since the economy is doing better, maybe rate hikes will come sooner in Canada.
Yep. Well, let's talk about this. Some news on inflation, and it's not looking good.
Well, we have a strong economy, so record employment, so you expect to show something up on inflation, and it's clearly what's happening, and the bank has been surprised on the inflation front. That's why they came out a little bit more hawkish in their last, when they presented their last forecast. So 4.4%, Martin, that's well above the 2% range for inflation. So yes, the markets are a little bit more nervous about rate hikes in Canada.
So how many is the market forecasting, and how many are we forecasting?
I think the market is pricing too many, Martin. More than 6 rate hikes right now. Just
more than 6.
Yeah, just a month ago we were at 2 or 3 rate hikes, similar to the not too much out of line with the U.S., but right now more than 6 in Canada versus just above 2 in the U.S. I think this is excessive. I think we're looking for 3 or 4 rate hikes, and we'll see what happens. But that probably explains why the S&P TSX is underperforming. You're concerned about rate hikes and the ability of consumers to absorb these rate hikes.
So in conclusion, Stéphane, the Canadian economy is doing fairly well despite more uncertainty in the global economic outlook, and I think it's going to remain volatile and lots of uncertainty over the coming months.
I think the Chinese situation bears watching. If they shut down their economy, there will be ripple effects on the economy and perhaps also on earnings. So let's keep an eye on that. And maybe just to finish on the story for Canadian consumers, yes, there might be rate hikes coming to Canada sooner than in the U.S., but the reality is we have excess savings in Canada that is the highest in the OECD. So we have a capacity to absorb a number of rate hikes before putting too much strain on the Canadian economy. So I'm still relatively optimistic for the Canadian economy for the months ahead.
Excellent. Thank you very much, Stéphane. Thank you for listening. As usual, if you have any questions, don't hesitate to send them to your advisor. And meanwhile, stay safe. We'll see you in a couple of weeks. Thank you.